so people
Change
that
my
miss
back.
it. Well, it's already in there. All right, well, we're gonna go ahead and get started. There's some more people coming in, but we'll start off. So one quick thing that I want to plug here is there's going to be a new club at Drake, or at least we think there is, called the Economics Club. So if you're interested in joining that, just send me an email and I can send you some of the president's information about that. So just send me an email and I'll put you in touch and put you in a group me with that whole group, but it's still in formation. It's not an official club yet, but I think we're going to get approved. So I think the format of this meeting, I'll keep it a little short. I'll admit someone here. I'll keep it a little short. I know everyone's busy and you're planning to go back home and there's a lot of stuff going on. But we'll kind of just go a little bit over the election results. Then we'll go over the portfolio and changes we want to make, because our next meeting is going to be February 2nd, because our next meeting would be during break. And then our next meeting after that would be during finals week. And then we have whole J term. So we won't be meeting for almost 3 months, is it? So we won't be meeting for a long time. So we'll try to position our portfolio relatively safe for that. And I'm going to take a picture for attendance as well. Hang on 1 second. Participants. All right, so we'll go over the election real quick. Let me share my screen. All right. So if you haven't been living under a rock, for the most part, you guys know that Joe Biden, or all the press has kind of declared Joe Biden as the winner of the election. So I know there's some lawsuits going on, and I think William Barr pushed some of those lawsuits to the federal level. So we'll see how those will go, but most people think that's pretty unlikely that anything will happen. Recounts are also very unlikely too, because usually it's within 100, but all the close states are within thousands. So most likely Biden's going to be our president. So that's one thing to note too. In the Senate, most likely the Republican Party will maintain control there, and the House Democrats will most likely have control, but I think Republicans picked up a few seats in there as well. But we won't spend too much time talking about this. Do any of you have comments or anything interesting about the election that you want to share, or how it might affect the markets? Or just anything in general?
I know it responded positively. What was it last?
Sorry, can you say that again? I couldn't hear you.
You're on mute.
There we go. I said the markets responded pretty positively. I think it was Monday. I think it was the first day after it got called. I know they're also expecting more stimulus to happen once he gets into office. So I know that yields are a bit higher on long-dated treasuries, because they're going to have to borrow more, so they have to factor that in as well.
Yeah.
But it looked like it was a positive response.
Yeah, good input.
And the vaccine didn't hurt things either. Really news about that.
Yeah. I think was it yesterday, the day after the election got called, they came out with the vaccine, and I think they said it was a 90% effective rate. So I know the industrial stocks did really good, and the NASDAQ got hit by that. The tech stocks got hit, so that was kind of interesting to see as well. But I think the S&P overall and the Dow Jones was up with the coronavirus announcement. We can also look here too, so you can see like that's like right when the vaccine got announced, and then the NASDAQ, that's right when the vaccine got announced. So they didn't because they're more reliant online. The Dow is more reliant in person, so that might be a part effect of that too. But yeah, no, good input. Were you gonna say something, Saul?
Not really, but I feel like if Biden's president, I feel like the oil industry, the stocks there will kind of go down, because I know after hearing him speak a lot, he wants to, I don't know if he's necessarily for the Green New Deal, but I heard that he's somewhat of a proponent. So I think there will be more probably rise in industries related to clean energy and stuff like that. So I think the oil industry is not going to do too well under him. But I think in the long run, if he does what he promises, then maybe he'll give rise to new interesting industries, and maybe we'll see good stocks that people can get in those other industries.
Yeah,
But yeah, the oil industry, I don't think there's much hope for that. So
yeah, exactly. And that was really good input, Solomon. There might be more regulation and maybe government intervention that might be happening with oil. And that's kind of why you've seen a spike in oil prices, because oil's going to maybe get more expensive to start drilling for. So I think, when was it? Yeah, Monday was when it was called. And you can see, or Sunday. Was it Sunday when the election was kind of called by all the media networks?
Saturday.
Or Saturday. Yeah, so it was Saturday sometime in here. And since then, oil has done pretty well. So yeah, he's more of a proponent of renewable clean energy. So you might see BP and some of those other oil companies struggle under the Biden administration. But Republicans still are most likely going to have control of the Senate. So there will be some maybe collaboration, or he'll have to work with them a little bit on that. But we'll see how that'll fan out. But it's definitely not ideal for many oil companies. But it's really good for renewable clean energy, because they might get more subsidies and more tax breaks and whatever government regulation that might get attempted to push through. Anything else? No? All right. I'll go over our portfolio here real quick. So last meeting, we couldn't really go over it that in depth, but we took a pretty big hit, around $100 or a $500 hit. And then we've kind of since recovered by around $400, and we're back at like around $8,000 total. And one of the things I want to do today is spend a lot of time looking at our portfolio, because like I mentioned, we're not going to meet for another 3 months. So we don't really want to be holding stocks that are very volatile and susceptible to big price fluctuations within the next 3 months. So we can look through this and see if there's any companies we want to sell, and then any companies we want to buy that we think may do well in the next 3 months by next time we meet. So do any of you have, well, we can start off with seeing if there's anything you guys want to sell, and keep in mind we have $740 just sitting in our money market or cash. So anything you see you don't like in this whole list? You can even say you're confident too, either one works. Nothing? You guys want to keep all of these? Or should we look at selling? All right, no, that's fine. We can keep them. These all look like relatively safe companies in the long run. I think all these companies are profitable, which is good. So now we have $740 to go shopping with. So any companies that you guys are thinking of purchasing?
I'll throw one out.
Yeah.
Chewy,
Can I get their ticker?
CHWY. They went up during the first lockdown, and I would expect that we're going to see another lockdown under Biden. It's a decently volatile stock, but I think there's a lot of upside, especially if we go back into another lockdown.
Interesting. And what do they do? I haven't heard of them.
It's a pet supply company, so they ship like pet
Oh.
food and stuff to people's houses. So whenever people can't go out to like PetSmart to buy stuff, you can just get it shipped to your door.
Gotcha. And I know another side note too that was kind of interesting is I think like a lot of animal shelters like were completely empty during coronavirus, like the lockdown, because everyone wanted a friend to spend time with during the lockdown. So that was kind of an interesting thing too that might also affect it. Donovan, were you gonna say something? Nope.
Are they a subscription-based company? Because if so, we have to consider the fact that like that increase in subscriber revenue is already priced in, or are they a one-time point of purchase type?
As far as I know, you can do it on a subscription. So you can set it to like be recurring every few weeks or months, or you can just do a one-time purchase. I know most of their users typically go with a subscription, but I believe that you can go either or.
Yeah. Let's look them up and we can look at their financials. Yeah.
I don't
Chewy.
know. Obviously, I guess something to keep into account is I was just doing a quick search on Chewy and just kind of like that, like online market in general, and they all saw a pretty big drastic a fall in their stock price just because of the release of the vaccine. So we got to think as much as we can think right now, and Biden's going to have maybe a stay-at-home order. Is that going to hold on till February? And
Mhm.
then we could see a decline, or we obviously could see a increase if the stay-at-home order February 2nd. So I think that's another just kind of component that we need to take into account.
Yeah, no, good input. And keep in mind, when is the inauguration date of the president? Because right now, Joe Biden still has no power.
January 20th.
January
Yeah.
20th. Yeah.
I
So
believe it's a Wednesday or something.
yeah. So technically, right now, Joe Biden has no power. Trump can still do whatever he wants, and I don't think we'll see a lockdown order under Trump. I think that's relatively unlikely. Biden, I have no clue. I'm not gonna take a random guess. But I think if Biden does get a lockdown, we can kind of have enough time to prepare because our next meeting would be within, what is that, like 12 days, 13 days. So who knows what that could look like, but we can look at their financials. And just out of curiosity, actually, I'm not going to do that. We'll go here. I was going to go to Fidelity, but I forgot most of you guys don't have that, so I kind of want to make it more accessible to you guys, even though I'm not a big fan of Yahoo Finance. Of course, their quarterly is locked. All right, so that's unfortunate. Let me exit out of this. I'll go to Fidelity and we'll just use them because we probably want to look at quarterly data, especially during these times. We don't want to look at annual because 2019 looked a lot different than 2020. Yeah, just another reason why I don't like Yahoo Finance, but I'm sure there's some other places out there that are good. SEC Edgar is fine. It's just that we don't have enough time in this hour meeting to sufficiently go through their whole financial statements. So we'll just go through Fidelity right now. And if you want, if you're researching companies, I have access to, what is it? Goldman Sachs analyst reports, and they provide an amazing amount of data on the company. So if you're ever researching a company, just reach out to me and I can get you that data because I have a subscription to that. All right. Is there any other stuff you guys want to talk about Chewy before we look at their numbers, more like qualitative things? Jack brought up a good thing with the timing of the presidency and when he'll take office. That definitely will have an impact. All right. So here's their chart. We'll just see how they performed recently through the time span. So I think this is a year. My computers are really slow. Yeah, so they've done very well over the last year. They kind of got hit pretty hard here. Looks like they were at $69 and now they're at $59. They took under a little under a $10 hit. We can do more short term if we want. We can see how they've done in a month. And yeah, they're down quite a bit. So kind of keep that in mind that recently they've been struggling. I don't know what the reasoning is for that, but it does look like a pretty volatile company. So maybe that's just the norm for the company, is just a lot of fluctuations in the price. So we'll go to their financial statements first. We'll go to quarterly. And look at, actually, looks like they're a relatively small company. Let me see how big they are real quick. Oh, no, they're valued pretty big. So they're a little over $25 billion company. So we'll look at their statements, go to quarterly, and this is their balance sheet. So this is their current assets, so assets that can be liquidated within less than a year, then non-current assets that are more long-term, over a year. So you know what cash is, receivables is other companies that owe the money, inventories is their inventory that they have sitting. I think just other that they couldn't categorize. Property, plant, and equipment. Intangible assets, they have none. And this other. So take a look at this and I'll give you guys around 30 minutes and 30 seconds. Oh, someone wants to join the meeting. I'll give you around 30 seconds to look at this. All right, do you guys notice anything interesting, normal? Thoughts, opinions?
They're buying it, a lot of inventory, and they're burning cash.
Mm-hmm. Yeah, good observation. So I think that was Matthew that just said you can see a good spike in their inventory, and that's probably coming from their cash because you see their cash kind of has been steadily decreasing. And a part of that might also be as they're buying more PP&E, property, plant, and equipment. So maybe they're building some more factories to keep up with the increasing demand during the COVID. So yeah, their property, plant, and equipment is increasing. Their inventory is also increasing, but they're using cash to pay for that. So yeah, good observation for assets. And we'll go to their liabilities too. And then this is equity down here. We won't pay too much attention to that. So now take a look at their liabilities. All right, do you guys notice anything?
Seems like their long-term abilities increased, but their current liabilities more or less stay the same. Same with long-term debt, which is interesting.
Yeah, exactly. So I'm not too sure where that came from, the total here. But yeah, there has been an increase in long-term liabilities, and everything else has stayed pretty consistent. So that's interesting to look for. We can also go to their financial statement and see if that's the cause of it, them taking long-term liabilities. And maybe a reason why they're losing cash too is, let's see if they're even making money. So here's their income statement. And we'll go quarterly. All right. So I'll give you guys a moment to look at the income statement. All right, do you guys notice anything?
Obviously, we're not on the positive, not something you want to see, but it looks like we're obviously our net income loss is decreasing, so we're making steps in the right direction.
Yeah, exactly. So Shorty was pointing out here in the bottom line, this is really all we care about for the most part with the whole, I mean, we do care about the rest, but this is like the main outcome that you're looking for. And you can see for the past 5 quarters, they've been inching closer and closer and closer to profitability. And that's mainly because you've seen a very strong spike in their sales, but their cost of goods isn't growing as fast as their sales, which is bringing them pretty closer to profitability. So they're still losing money. That's probably why they're burning through some cash and taking on some long-term debt right now. But they're building more property, plant, and equipment. They're expanding their balance sheet, and they're getting closer to profitability. So it looks like this company's been on the right track for the past 5 quarters, and that's pretty good. But yet they're still losing money. And you only want to invest in a company that's losing money if you think they're going to achieve profitability sometime in the near future. Otherwise, there's no point to basically be a part owner in a business that's losing money. Anything else people kind of want to point out? No? All right. Yeah, I think that kind of mostly just covers it, that their sales are growing at a very healthy rate and their cost of goods is not growing as fast, and that's why they're getting closer to profitability as well.
About their cash flow statement really quick. I'm just curious.
Yeah, sure. This gets a little bit more complicated. We can look at this. And I won't go over it too much. I was planning to maybe I'll go over this a little bit in next semester, but yeah, if you want, you can take a look at it. Is that good, Matthew?
Yeah, I was just curious what they're what they were doing with their capital expenditures. It looks like it's increasing
Yeah.
slowly but surely, so that could be a positive sign.
You like to see that too. But yeah. All right, we'll go over to their key statistics, and we kind of talked about this 2 meetings ago. It was we talked about their market cap. So they're a relatively big company. $25 billion is their valuation. That's what the market thinks they're worth. Enterprise value is right around there. And unfortunately, they're not going to have a PE ratio. Do you guys know why they don't have a PE ratio? See if we've got any geniuses out here.
Not making any money.
Yeah, correct. They don't have any earnings, so it's $59.92 divided by 0. So you're not going to have a number for that. So maybe once they achieve profitability, we can see their PE ratio. So it's kind of hard to see if a company is expensive or cheap without a PE ratio. So that makes it a little more risky and harder to value the company. But you can kind of tell by their balance sheet if it looks good. So not too much to look for in Chewy's valuation, because a lot of it's just not valued. So that's mostly it on Chewy for their financial statements. Does anyone want to comment anything about their financials, qualitative, quantitative, anything about the company in general? No? All right. Well, yeah, I think it's just interesting with like, and who was it that recommended Chewy again? Was it Henry?
Yeah, that was me.
Yeah, so good recommendation. That's very interesting. I've never heard of them. I'm surprised I haven't heard of them actually. But yeah, maybe with a second lockdown possibility, we could be seeing that, but we don't know how the coronavirus is going to play out, and that might be part of the reason why we've seen the stock maybe take a mild tumble, is because of the vaccine. So maybe the price of the stock already has the vaccine factored into it. So interesting stock.
So I was just wondering, wait, how's lockdown different than quarantine? Lockdown is when everything's shut down, right?
Yeah, so I think so. I mean, I think I'm not an expert. I think a lockdown is like where it's like mandated that you have to stay back, and then quarantine is. I don't know. I'm not super familiar with the terminology on it, but if I'm wrong, just please correct me, because I can be wrong sometimes.
Oh, so like what we had in March was a lockdown, right?
I think so. I mean, I wasn't really like, I would still hang out with friends and stuff, but like just within my inner circle, but I think it was like kind of a loose lockdown. I know some countries are way more strict, like Italy was extremely strict, way more than the US. So I think it's kind of like, it might be more of a loose term saying like, yeah, the US is in lockdown, but some bars and states are still open and there's parties. And then there's a lockdown in Italy, and you can only go out to get groceries. Because I knew some
people allowed to go even outside during lockdowns, or did they just have to stay at their homes?
I spoke to someone from South Africa, and they were in lockdown, and you could only go to get groceries. Other than that, you had to stay in your house, and you couldn't
You couldn't even walk outside.
receive mail in South Africa.
No, I'm
That's what
saying like walk outside, just breathe in the fresh air.
I doubt it. If
Oh
you could
my
even get
God.
mail, I doubt you could even walk outside. But yeah, I know some countries are strict, some countries are more loose, but I think it's kind of more of a almost an umbrella term. But that's kind of
I
from my
see. I was
experience.
just wondering. Okay.
Yeah. Any other stock recommendations, ideas?
I was thinking looking into like cloud computing. So we kind of have some of those in our portfolio already. We have Microsoft, right? Dan, you
Mhm.
want to pull it up?
Yeah, I'll pull it up here.
What Microsoft, Apple? Um,
Yeah, no Microsoft.
yeah,
And
Microsoft and Apple. So I mean, we kind of already have that industry covered, but if we wanted to look at maybe going with another cloud computing or kind of cloud company, I know we mentioned Alibaba a while ago,
Snowflake.
and I think they have kind of a cloud computing sector and possibly considering the kind of approach Biden said he was going to take with working with uh, like China and other national companies,
mhm.
that may be a better option to take. Is just another idea to throw out there. I know we
Yeah.
already looked at their financials.
Yeah, so I know Microsoft, and I'm not sure too much about NVIDIA, but I'm sure NVIDIA is and Apple are big into cloud computing. I know a big leader is Amazon. They have like big warehouses full of data too. So do any of you guys want to throw out maybe companies that have good potential with cloud computing? I'm not super familiar with that industry. I haven't researched it too heavily. So you guys probably know more than I do.
Hey Dan,
Yeah.
it's Cody on Noah's. I just wanted to say I probably won't be attending the tomorrow session since I'm on this one.
Oh no, yeah, you're good. I'll mark you down as
All right.
here.
Sounds good. Thank you.
Yeah, no problem, Cody. Bloomfield, right?
Yup.
All right, perfect. All right, so any cloud computing stocks you can think of?
Ben said Snowflake. There's IBM, Salesforce, I think it is.
Oh, Salesforce is, yeah, they've done really well.
Mhm.
I know Salesforce reported earnings and just absolutely crushed it. I know
That
Snowflake did.
platform's so versatile. They can do so much with that CRM, just not like the sales, just so many applications.
Mhm. So what do you guys want to look at Salesforce, or do you want to look at a different one to start off with? I'll put you guys in the driver's seat. This is for you, not me.
We can just go Salesforce right away.
All right, so we'll look up Salesforce. So we'll look at their chart first to see how the market has been valuing them. Had a pretty rough day, down 4.5%. So we're on their 3 months. This is where they reported earnings right here. So they went from $213 to $250. So yeah, they absolutely crushed it. They're down a little bit from their peak when they reported earnings. So kind of just factor that in. We'll go to more of a year basis. Let's see how they've done the past year. So they went down like during COVID, been going up the whole time, and then earnings came out and they absolutely killed it. So kind of just remember this graph in your head when you're looking through their financials and think, is the recent price fluctuations justified? Do you guys want to, before we look at their financials, do you want to talk about Salesforce? Anything about them that you know about? I haven't researched their company and their management too well, so I don't know how they're run or what their breakup of revenue is. If not, it's fine. We can just hop into their financials. So we'll start off with their balance sheet. And I'll give you guys a minute to look over this. All right, do you guys notice anything off the bat? What's worth noting? My internet connection isn't stable. It says, can you guys hear me? All right, perfect. Anything with assets or liabilities, I just noticed that's interesting. If you think it looks normal, you can just say, I don't know, looks pretty normal to me, pretty healthy.
Yeah, I'd say it looks pretty healthy. You can kind of see, I mean, looking a year ago, their non-current assets, others, we see what about little over 10 grand exactly, no clue. But you kind of see the cash increase and just looks like it's a healthy company.
Yeah,
for the most
sure.
part.
Yeah, I totally agree with Shortsy on that. Good input. So he kind of said, yeah, some of the current assets increased here by around, I think that's 300 million, a little, probably 250 million right here. And they saw a big spike in cash here by almost 2 million or $2 billion. And they've done something with 500. So that's kind of interesting. Usually when you see a decent spike in cash, you might think something's coming up. So who knows, maybe they're planning to buy a company or whatnot, or maybe they just had a really good earnings season and they made a lot of money. So yeah, pretty healthy balance sheet. They have a lot of assets. They have $57.8 billion in assets, but under 20 billion in liability. So a very healthy balance sheet. It's something you kind of like to see. So very good balance sheet, pretty normal. Nothing too crazy here. So now we'll go to their income statement and look at this, and I'll give you guys a minute to look over here at this income statement. I'm sorry. I had it annually, not quarterly. My apologies, guys. All right, now I'll give you a minute. All right, do you guys notice anything off the bat?
Good last quarter, obviously. Looks like steady increase in sales, kind of definitely plugging away.
Mhm.
Same with cost of goods sold, it's just increasing obviously as your sales increased. But obviously you see those two negative net incomes, but it seems like they're they turned it around last quarter, so it'll be interesting to see what they do in this upcoming quarter and years going forward.
Yeah, exactly. So you can obviously see they've done pretty well last quarter, kind of blowing it out the water with their net income. The big part of that is look at this huge pre-income tax credit they got. I'm not sure. I don't know too much about taxes or corporate tax, but that's a very large amount, and that obviously helped them. That tax credit helped them with their net income as well. And one thing that's worth noting, hang on one second here. I know some more people join. I'm just going to get attendance before I forget. And one thing that's worth noting too is you can see that their sales increased by, what is that, almost $300 million, but their cost of goods have stayed relatively the same. And that's kind of one of the beautiful things about cloud computing is kind of with the additional sale, your cost of goods sold doesn't go up with it. So there's no really relation with that. So that's one thing that's really awesome with cloud computing is it can get very profitable very quick. And last quarter they absolutely killed it. And that's kind of thanks to their increased sales, cost of goods staying flat, and then also that big tax credit that they got hit with. Anything else you guys notice here? It just looks relatively healthy in my opinion, like up here, the tax credits can kind of mess up some of the numbers. So like if you see a lot of discrepancies here, just look at the sales and cost of goods and see kind of what the relationship is between those two numbers and see how they progress over the years or over the quarters.
Probably minor, just they're getting squeezed a lot with depreciation. So I'm not sure
Yeah.
if they're like doing a lot of investing of non-tangible assets, because I don't think they have a lot of like physical assets they'd be depreciating, but they're getting squeezed there a lot, but minor point.
Yeah, and I think, correct me if I'm wrong, guys, because I'm not super big into tech investing, but I think a lot of what's on tech companies' balance sheets, especially with cloud computing, is these very high-tech computers and storage systems, and those depreciate in value extremely fast. Think if I can kind of almost draw an example, think if you had an iPhone 6 a year ago, how much that'd be worth now, because the rate of technology growth is insane. So the value can depreciate relatively fast. So I think that's part of the reason why they're just getting slaughtered with depreciation and amortization. Because yeah, these are big numbers, but it's kind of just one of the costs that you have to incur with cloud computing, because you constantly have to keep up with the rapid innovation within cloud computing. So I think that might be one of the roles or factors that affect the alarming depreciation and amortization figures. Does that kind of make sense, Matthew?
Yes.
Yeah. No, good job pointing that out too. I was looking at that and I'm like, yikes. It's just one of the costs that you have to pay for with being a tech company. Any other questions or comments, I should say, about their statements, balance sheet, income statement, numbers in general? We'll look at their key statistics here in a second. Alrighty, so we'll move over to the key statistics. And they are a very big company, $235 billion. The software average is 56.6. So yeah, they're a big player. And their PE ratio is 101. Now, if you remember last time we kind of went over this, I think the S&P average was 28. So usually the higher it is, it means the more expensive the stock is. But they're expecting, the reason the PE ratio is really high is because they're expecting them to do a lot of growth over the next few quarters. So that's why you see a very high PE ratio with them. And the same thing with Amazon. I know Amazon's in the hundreds. That's because they're expected to continue to grow at a faster rate than maybe BP Oil or JCPenney. So that's one thing you can look at. Then you can look at their PEG ratio. That factors in growth, the 5-year projected growth. And that's also a little high. You usually want that around 1.8. So kind of look at that. Go down a little bit. So it looks like their valuation is a little high. their price of the stock is priced pretty high because they're expecting very, very strong growth. And that's why you see a very high PE ratio as well. And maybe that PEG ratio kind of hints at maybe this price being a little higher than it should be, because the average is around 1.8, and anything below that is cheap, I would say. You guys have any comments about the valuation sheet? No, all right. And then some of these numbers are kind of like crazy earnings per share growth. I mean, they had a tax credit, and last quarter they lost a lot of money, so that's why you see like this crazy growth. But you can see they've been performing better than the market average for quite some time. But yeah, just good to note. We'll go to their snapshot again. Just look at their price valuation. All right, any other comments about, why am I blanking? Salesforce? No, all right. Any other stocks you guys want to look at? Maybe that could do good under maybe a Biden administration. I know Chewy was kind of thrown out there, CRM. Anything else that you think might do pretty good? No? Well, if you guys want, I can end the meeting a little early and we can take a vote right now on those two, and also cash if you don't want to buy it. Do you guys want to do that? Take a vote on those stocks right now? Yeah, all right. We'll get you out of here early. So I'm going to create a poll. Just give me a moment here. So we have Chewy, CHWI, Salesforce, and I'll put cash if you don't want to buy any of these companies. You don't like either one of them. Chewy, Salesforce, cash. All right, so I'm going to launch polling. You should be able to see it now. It's going to be a close one, almost like the election. Two more votes. This one will decide. All right, and I'll give you. All right, so everyone voted. So it looks like, can you even see the results? But Chewy won. Oh, you can't. Oh, wait, I can do end polling and then share results. So Chewy won. So we'll be buying Chewy, and we'll put in that trade tomorrow. And if you don't follow the Instagram page, follow it. I always put the trade orders on there. But yeah, that's mostly it. Remember, our next meeting is February 2nd, so mark your calendars. And if you're interested about the Economics Club, send me an email, and I'll see you guys in 3 months. Have a good one.
Thank you.
Thanks, Danny.
Yep.